So you want to start a business. You've got the idea, the name, and a plan, and you're ready to launch. One of the most important and often overlooked parts of starting your business is choosing a business entity. Once you choose an entity type, you'll have to follow its requirements. However, there are tricks and things to know that can ease the process. What is a business entity? A business entity is a legally formed and registered organization that exists to operate a business. They're also sometimes referred to as business structures. If you're forming a business, there are 6 basic entity types to choose from: a corporation, a limited liability company or LLC, a nonprofit, a partnership, an S corporation, or a sole proprietorship. How do you choose a business entity? The different business entity types have similarities and differences, advantages and disadvantages. The business entity type you choose can affect essential aspects of your business, such as legal liability, how you keep your business records, and how the IRS taxes you. What is the best business entity for your small business? The business entity you choose can have a significant effect on several aspects of your small business. Everyone's business is unique, and everyone's situation is unique. Therefore, it's crucial to carefully select the type that's the right fit. Option number 1 is the limited liability company or LLC. There are different LLCs available: a single member LLC and LLCs with multiple members. An advantage of LLCs is that owners enjoy pass-through taxation. This means members can pass profits and even losses through to the owners. Another advantage of LLCs is their flexibility. For tax purposes, LLCs can be either single member or multiple member. Plus, LLC owners can choose how they file and pay taxes. The options are to file as a disregarded entity, which applies to single member LLCs, as a corporation, which applies to LLCs with multiple members, or as a partnership, which also applies to LLCs with multiple members. A disregarded entity is considered separate from its owner. If you own a single member LLC, you'll report your earnings on a Form 1040 or 1040 SR Schedule C, profit or loss from business, a Schedule E, supplemental income or loss, or a Schedule F, profit or loss from farming. The following are other possible scenarios for single member LLCs: the Form 1120 or 1120S for individual LLC members who operate their business as a corporation, and the Form 8832 for a single member LLC which conducts its business as an LLC but would like to file as a single member corporation. LLCs with multiple members also have options with filing and paying taxes: the Form 1065 for LLCs with multiple people filing as a partnership, or the Form 8832 for LLCs with multiple members filing as a corporation. LLCs with multiple members don't need to submit Form 8832 if they file the taxes as a partnership. Even though LLCs offer flexibility, they also have disadvantages. All members of an LLC will have to pay their individual taxes on the company's earnings. The cost of starting an LLC is also higher compared to other business entities. S corporations are another business entity option that you can choose. There are 5 requirements to form an S corp, and they are: you must be a domestic corporation, have no more than 100 members, have only allowable shareholders, including individuals, certain trusts, and estates, have only one class of stock, and not be an ineligible corporation, such as a domestic international sales corporation, certain financial institutions, and insurance companies. S corps allow shareholders to avoid double taxation, federal tax and individual tax payments found in other business entities. This is due to their structure as a pass-through entity. Profits and losses are passed through to shareholders, who then pay taxes on their personal tax returns. Another advantage of S corps is the liability protection they offer to business owners and shareholders. S corp owners receive personal asset protection, which allows business assets to remain separate from personal assets. And finally, S corps that don't have inventory can use the cash method of accounting instead of the accrual method. Now, even though S corps have these advantages, there are also disadvantages. For instance, your company must already be a C corp or an LLC to become an S corp. Shareholders will do this through a shareholder election, which requires you to complete Form 1120S. Another disadvantage is the processes that S-corps must follow to keep their S-corp status. Articles of incorporation and corporate minute documents must remain updated. Shareholders must also pay taxes on their S-corp's income even if they didn't receive a portion of that income. A final downside to S-corps is the salary requirement. Officers and owners of an S-corp must make a reasonable salary even if the corporation isn't profitable. Corporations, or C-corps, are another type of business entity where members of the corporations are shareholders and shareholders are separate from the corporation. There are 4 requirements for corporations. A C-corp must have a board of directors and shareholders. It has a more complex structure than a limited liability company. It is legally independent of its owners, and it's not a personal tax liability for its owners. The structure of a C-corp gives it several advantages. If you form a C-corp as an owner or a shareholder, you'll have limited liability protection. Also, C-corps are separate entities from shareholders, giving shareholders peace of mind about their assets. There's no limit to the number of shareholders that can join a C-corp, and the existence of the company does not end if an owner leaves. Instead, the board of directors continues the corporation's operation. C-corps also offer tax benefits to owners and shareholders. You may pay taxes at a lower tax rate if your business income falls into a lower tax bracket. Another advantage of C-corps is their tax deductions. Corporations can receive tax deductions for bad debts, charitable donations, compensation of officers, depreciation, employee benefit plans like insurance and pensions, rents, and repairs and maintenance. Although C corporations offer benefits to owners and shareholders, there are a few downsides. C corps aren't as easy to set up compared to other business structures. C corps are also subject to double taxation, where the corporation pays a federal tax and then shareholders pay an individual tax for the corporation's profits. Partnerships are a convenient option if you're considering starting a business with at least 2 people. There are 3 different types of partnerships that you can select: general partnerships, limited partnerships or LPs, and limited liability partnerships or LLPs. General partnerships are the most common partnerships. An advantage of general partnerships is that all partners can manage the business and share the profits. A disadvantage is the liability that partners can face. Personal assets can be sought for all members in a general partnership. Depending on your business needs, a limited partnership may be best for you. Limited partnerships differ from general partnerships in essential ways. In a limited partnership, there is a single partner and a general partner who has unlimited liability. The general partner acts as a manager for the partnership and is also responsible for any business liabilities. Other partners have limited liability. These partners aren't responsible for managing the business, but they're allowed to invest in the business. The final choice for a partnership is a limited liability partnership. You may consider this option if you want your partners to share liability. All partners in a limited liability partnership share liability. Sole proprietorships are the most uncomplicated business entities to form. They allow you to create a business and operate it as an owner. Sole props offer several advantages compared to other business entities. For instance, for tax purposes, sole proprietorships require you to use your individual income tax return, the Form 1040, and information about your business's loss or profits on a Schedule C. Sole proprietorships don't require you to have a separate bank account to conduct your business, though it is recommended. And the cost of starting your sole proprietorship is lower because there are fewer requirements. You won't need a board of directors or to track any meetings. And even though sole proprietorships offer significant advantages, there are definitely disadvantages that you should know of, including a lack of training. Sole proprietors aren't required to have formal training to start their business, which can create organizational problems due to not knowing what bookkeeping needs you should track. Sole proprietors are personally liable for company debts, as there's no separation between the owner and their business, Therefore, sole proprietors have no liability protection. And finally, as a sole proprietor, you're responsible for several taxes that other business entities can avoid. You'll pay income tax, sales tax, and self-employment tax. You'll also need to set aside money for quarterly estimated tax payments to avoid paying a lump sum in self-employment tax. Nonprofit corporations are the most specific business entity. Corporations may operate as a nonprofit for 5 purposes: charity, education, literary, religious, or scientific. The structure of nonprofit corporations allows them to have an exemption from taxes. This is for both federal and state income. Nonprofits operate similarly to C Corps regarding their organization. Nonprofit corporations can only use their earnings for the above industries. Income from nonprofits cannot be used for any campaign. Nonprofits cannot use their profits as a form of income for their employees. Choosing the best entity for your small business can have a significant impact on your business requirements. Work with an accountant today to make sure that you'll select the right business entity for your needs. 1-800-ACCOUNTANT is here to help small businesses thrive. From helping to launch your business the right way, to taking over backroom tasks that take you away from doing what you love, running your business. We offer upfront pricing designed to fit into every small business's budget and a satisfaction guarantee. If you found this information useful, interesting, educational, please take a moment to hit like and subscribe and reach out today for a free tax savings consultation at 1-800accountant.com.